Hi, it's Greg here, and I'm here with your Daily 5. So first of all, I want to talk a little bit about a difficult market we're in and some of the clues that we've got that this could be a bigger picture problem. So first of all, this is a chart of the Nasdaq new highs and new lows index, and down at the bottom, that's what's on this lower panel. And what you can see is that we rarely get below this blue line down here, but that's at zero. And what we see is really since November, we've been unable to make enough new highs. Now, shortly after the COVID crisis, you're not going to make any new highs because the market has pulled back so hard. So that's one way to look at it. But you can just see going all the way back into 2014, this is the weakest and messiest this has been since then, and it's even worse than the 20% drop in 2018. So what I'm worried about is we've been consolidating kind of in this red line area and a little bit weaker, but we could actually end up literally having this whole thing kind of break down hard on us. So that one worries me a lot, that we're setting up for a big picture that looks a little bit messy. In the middle is the 2-week moving average, and you can just see that all the big down periods in the market, we end up painting these big gray panels. Well, we've been painting this gray panel for a while, so we're in a difficult market, and down markets are hard to manage. So just make sure that if you're getting thrown out of trades, you're happy to be there. A move to cash, that doesn't hurt. So New York Stock Exchange, so the other was the Nasdaq. This is the New York Stock Exchange, same chart, levels slightly different. So I've got this blue line at 100 on the chart here. And what you see is when we stay below 100, we're typically in a weaker market period. And you can see back in 2018, we stayed down there. Now it's not as sour looking as the Nasdaq, but it's still pretty messy, and we haven't really broken the uptrend on the New York Composite. This is as of Tuesday night. So the point I want to make here is we've been trying really hard to push to new highs here on the New York Composite, haven't been able to, just keep wobbling around up here. The energies and banks, a lot of them are listed on the New York, so that's part of the reason. But in general, both markets are now starting to break down. So that's the bearish news I wanted to put out there. Or the data is set up so that they could break down really hard. The 2-week moving average of the New York high lows on the for the stock market, you could just see we've been declining really since the middle of summer. We had a big push here in October, November. That was a nice kind of final surge, but we haven't been able to do much since then, really no kind of up tilt in that data. So that makes the market very difficult here. So the third thing I want to talk about is my strength indexes, and the reason I want to show them now is what's happening is, you know, we get these nice rallies off the lows, and they're really important places to buy, and roughly we got 8 of them last year. So when you can time your purchases, that works out pretty well. Now, this blue line here didn't really get going very much, so even though the market was going higher, we didn't have a lot of participation in a broad, a lot of industries participating. That's probably the best way to say it. So the issue was we were going higher, but it was like a thin market. Well, in October, we had a beautiful surge, and in December, we had another beautiful surge up. We made new highs on Jan 1 or early January on the S&P 500, but not on the Nasdaq. And now what's happening is we're back where more than half of the charts I track in this specific chart list I created has fallen apart, and we're now dipping down into the lows. Now, we could stay down here for a week, a month, a day, but the whole idea is roughly last year we had 8 nice entries. Well, we don't know when we're going to get the nice entries. So the idea behind this chart is to kind of help me judge when I want to be safe. And when we started to break through the 50% levels last week, it was telling me that not only was this a problem, but we were probably going to go down a little bit harder. Now, my blue line in here, you can see here, here, and here, it typically topped out pretty much at the 75% level all 3 times. So once we kind of have our initial thrust off the big lows in 2020, it ran up into the 90% level for a while. Now, all of a sudden, it only gets to 75%. So of the charts I'm tracking, only 75% of them have enough momentum to actually push higher. And that data is pretty important for us. So when that hit at the beginning of the year, I was saying, this is kind of where we top out, so be careful. And anyway, we've had banks and oil and mining to some extent have done okay since then, but tech has really taken a hard fall here, and it's been very difficult for people trying to trade in and out. My big picture view that I want to share here specifically is that this is based on the high-low data I just showed you and the strength index. This is pretty critical that to stay really aware of how weak this market is and how much we could move down here. So I want to make sure I communicate very clearly that we're in a position of extreme weakness. And I know we have options expiration and earnings and Fed meeting next week. We've got lots of reasons to be optimistic or pessimistic. My big thing is the market is telling us underneath the surface that we have a lot of weakness. So try and keep that in mind. Right now we're still trending down. So for me, that would mean no new purchases. If I get kicked out of trades I'm in, it throws me out. I've been in energy and mining, and they've been holding up. If they start to break down, it just kicks me out of those trades, and then I move on and wait for the next setup and do that again. Okay, this is a big picture view that I want to carry or share. So the exploration and production ETF compared to the Nasdaq 100. And what you see is on each one of these rallies since 2020, every time the exploration and production rallied up to this level against the Nasdaq, it reversed. And interestingly, we've had 5 of these now where we basically get to this level and the exploration and production ETF stalls out compared to the Nasdaq, and the Nasdaq starts to rally. So if that's the case, we're actually at a point sitting here on Tuesday, January 18th, that perhaps all of a sudden the Nasdaq gets fired up and we start cooking, and the energy and exploration takes some time off. Now, I will say that this is the shortest rally on the chart. Most of them are multiple months. This one was, I'll call it 2 months. This has been 2 weeks. So pretty short. Anyway, I think it could extend quite a bit, and that just having that data is pretty helpful to at least be aware. And we have the same thing with the copper miners compared to the QQQs. And if they break out, I think that's helpful to know. But we still have the situation where we need to be cautious. And if there was a time for it to change, it would be right about now. Okay, now this is a friend of mine. We do a lot of chatting every day, and I've seen this chart before, but he recently pointed it out to me again and go, see how this chart's breaking down. And I just thought it would be nice I'd share it with him. And his Twitter handle is trend_bullish. Really a great chart, though. What the big thing here it shows me is, we had a big downtrend coming into the 2000 lows, and then the Nasdaq started to underperform and energy started to outperform, and that ended up running until the 2008 top. Now, there was a brief period in 2003, 2004 that pulled back for a year. I still think we have lots of upside for energy, so I don't actually expect this to be the short end of the trend here. I think we're literally launching this out of the hole. We're in a world energy crisis, not a climate crisis, a world energy crisis where we're trying to restrict people's use of energy, and I think it's going to get messy as people in New England have seen some power pricing running up 10 times what it was a couple of years ago. Europe seeing 10 to 30 times, the UK, China. This is going macro, and so I think we're going to see a lot more pressure on oil coming to the rescue to try and help things out. So this chart to me looks like it's breaking out long term, so I want to be long oils. I mentioned last time there were lots of good trades in there, so hopefully you're catching those. So my strength index is currently 35% and weakening. If you're interested in the work we do at gregschnell.com, I think this is going to be a harder year than ever to invest. So if you're looking for some help, hopefully we can give you some ideas there. Again, thanks for watching, and hopefully you've enjoyed your Daily 5.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.